Are you reducing your revenue guidance? I'd like to know what exactly has gone wrong in
Q4. You're confident of doing that?
We have to do 1,700 crores of revenue for Q4. We are confident of doing that because 1 month is already completed.
You are saying 1,700 crores in Q4?
Yes, Q4.
Kaynes Tech and Jairam P. Sampath, whole-time director and CFO of Kaynes Technology, joins in right now on the show. Mr. Sampath, good having you. Thank you so much for taking the time out. This is Neeraj here. Good morning. And I wonder if, what led to the slightly lower execution, if I can use that term, for Q3, which is leading a lot of people to ask whether Kaynes will be able to meet the FY26 guided numbers, or could there be a cut in the guidance?
Yeah, so good morning, Neeraj. Good morning to viewers too. So fundamentally, we plan for a mega quarter in Q4. It's about 1,700 crores. We are 1 month already completed, and we are quite confident that remaining 2 months we'll be able to do whatever it takes to get the 1,700 crores quarter, so that the total is around 4,100 crores thereabouts, which is something like between 46 to 50% growth over the last year's numbers. Now, while doing so, also we are confident of bettering our EBITDA number too over the time. Now, coming back to the execution, see the order book. So there are two ways of looking at a business performance. One is the execution delivery for the quarter, and second is how prepared they are for the future. So on the second front, I think we have done pretty well. On the first front, which is actually delivery for the quarter, we have gone through a few customer delays, etc., which has led to a little bit of inventory pile up and so on. Never mind, it happens in business. There are cycles wherein something comes down and something goes up. But then in the fourth quarter, we think that we will be able to overcome these problems and deliver numbers for the year in terms of about 4,100 crores. Plus also we will be able to reduce the working capital cycle. Last year it was about 85 days. We probably will get it down to less than 85 days. It more likely to be around 80 days. It will be. And then also in terms of cash, which is the biggest concern for the street, we are almost on a standalone basis cash positive.
Mr. Sampath, if I may ask a question, Tamanna here. Are you reducing your revenue guidance for the year? It was 4,500 crores. You've just talked about 4,100 crores. Is there a requirement for a downward revision after the quarter you've had?
No, it's actually there is a railway product which is about 3 billion rupee worth of this year's worth of business, which has got postponed. So that probably, if it's computed, barring that, we are achieving all the numbers and so on. Our revenue guidance was actually in the EMS sector of 4,250. And then there were new businesses that we said we will get like 100 crores from the semicon and so on. So that's how the revenue guidance of 4,400 was brought up. So semicon, we don't want to put further pressure on delivery right now. We were already the fastest off the block, and we want to make sure that all the other three clients also approvals are got this year, so that next year we have a full year working and then delivering for all the three clients. So from that perspective, the semicon business being new business, the forecast probably was not held up in terms of numbers, but we are confident that we'll make up whatever the 100 crores that we've kind of got postponed next year.
Sure, I'm sure, sir. I'm sure there must be valid reasons, but it is as it stands, it is a guidance cut. I'm not saying they're not valid reasons. There's the railway business, and I'd like to know what exactly has gone wrong in your view, or what is the pain point in the railway business and the postponement of the semicon business. What are the pain points here?
Yeah, so fundamental pain points, railway business being a new product, is a safety critical product. And this was, even though we had approved product with us, we ensured that we give the best possible solution at this point in time, which is our collaborators commented saying that they should go for the next version now itself. So on our own, we have taken the step to make sure that later on there are no troubles. We have taken this step to postpone the product introduction. So the pain point was that the product that we are going to do is a safety critical product, and we wanted to give out the best possible solution to the Indian Railways. As far as semicon is concerned, we have just it's about a matter of 100 crores, which we'll make up in the next year. But it's important to notice that all the new investments have come of age now, both OSAT as well as PC board. And I want to bring to your attention one thing. I know not many people have noticed that PC board business is 1,500 crores business and with a good EBITDA, but that's not our target. Our target is to get about 15,000 crores of EMS business out of this PC board business, which is possible because we engage with the OEMs at the big stage of their design. So
Right.
this is something that is missed out by a lot of people, and that's why we did not acquire those companies which have
Sure.
lower technology. So,
Mr. Sampat, that's too much information for me also to digest. So I'm going to break it up piece by piece, just one thing
Yeah.
at a time. So if you do 4,100 crores, let's say, right now, right? And there is a miss here and there. If you execute it more, you might reach that 4,300 number or you might go over. But let's assume for working numbers that you do 4,100 crores for the year.
with a 16% EBITDA, yeah.
Yeah, agree. So I'm going to come to that. But if you do 4,300 crores as well, you have to do 1,300 crores of revenue in Q4. You're confident of doing that?
We have to do 1,700 crores of revenue for Q4. We are confident of doing that because 1 month is already completed.
You are saying 1,700 crores in quarter 4?
Yes, quarter 4.
Okay. And that happens, you are saying at 16% EBITDA margin?
Yeah, that happens at a higher EBITDA margin actually, that quarterly number. But for the year, you will get
average
about,
it out to 16%.
Yes.
Got it.
Just trying to understand, Mr. Sampath, because you joined us on December 10th, and your guidance was where, you know, we had seen it earlier, around 4,400 crores odd. What has happened in the last 20 odd days? Just trying to understand if there has been a fundamental understanding or, you know, new information coming in, or what is the reason that you're seeing this?
Okay, so let's split it into 2 parts. One is whether business is there or not there. That the order book will tell you.
Yeah.
Order book, there is healthy growth.
Sure.
And order book still grows at about 50%. That is quarterly about 12.5% growth is there in terms of new orders entry. What has changed is our strategy of addressing this devices business, especially in the smart meter arena, because there were the concerns about cash flow being locked up in businesses like smart meter. If you had a higher than normal percentage of composition of smart meters being part of our business. So what we have done is we have redone the scheduling a little bit, and also certain new products, etc., which probably Kavach we should have delivered this quarter, but we chose to postpone it for some time now. So this is the 2 items. They are deliberate part of the strategy. Business is strong. The profitability is good.
What's the strategy, sir? What is the strategy? Is it, were there safety concerns? What is the strategy to postpone it?
The strategy is to make sure that when we come in and launch this new product, we don't want a situation like some of the peer companies, had to redo their product, etc. So we want to make sure that we give the best solution possible and then gain market share in that. So the chance to do that is right now. And we don't want to be in a hurry to launch new products, especially in the safety critical area. That's the basic reason why this whole thing has happened. And also we are looking more closely at our cash flows. Operating cash flow positive is something that now we will deliver on console basis end of the year. This year, this quarter on standalone basis at least, we are pretty near being operating cash positive, just about 55 crores in negative. And that could have been actually managed by some bill discounting, etc. But anyway, things are what they are, and we are sure that the working capital cycle also, that's another concern that Street had. We are making sure that that is also kind of managed a lot better than the past.
Got it. Okay. So, Mr. Sampath, one final question. If I look at it from nearly March 2021 or until now, even if you reach this 4,100 crore number that you're talking about, right? You're doing almost a 40-45% CAGR. I mean, my math may be a bit here and there,
Yes.
but roughly around 40-45%. You reckon that with the order book growth, and it was higher than the averages for the last couple of quarters, which is good, by the way, for quarter 3, but you reckon with the order book inflow that you have and the newer venues that you're doing, you reckon this 40-45% CAGR growth rate can be maintained until FY28, maybe FY29? Is that possible?
Yes, very much possible. That's why I was talking about the PC board business being also a kind of foundational business for EMS, because PC board is the first stage in which the OEM brings out the design. And then when we associate with them early, then most of the businesses today we have in EMS are after some couple of people have looked at it, some other suppliers have supplied the initial lots, etc. There are very few businesses which are new and fresh businesses, whereas the PC board business of 1,500 crores potentially can give us about 15,000 crores of EMS business in the high-tech area. In the
I know we need to let you go, but you just mentioned in the previous answer that you are managing working capital requirements, and that was a concern of the street. How are you doing that?
Yeah, so we are making sure that the inventories inflow is controlled, so that this year we know now the task cut out for us and we know the orders, etc. So we are making sure that we don't get in inventories which are not required for this year's execution. The second thing is for execution of receivables. We are working with our clients to get the supply chain finance done, so that without recourse to us, we can actually collect faster. So these are the two primary means by which we think that we can do this thing better. And hopefully, we will achieve this when I meet you in April sometime. I'm sure you would see the merit of most of the arguments that we are doing. Yes, I do unambiguously accept that maybe the expectations were built a tad higher than it is, but it's required for us to also keep working on higher expectations. It's better to be sharp on that rather than give a conservative number and then overperform. That's one type of story for us. It's very important that we keep up the pressure. And the other question that Neeraj had asked about the CAGR being what it is, so now you'll see the merit of this CAGR coming into play. We still hold our $1 billion target. We still hold our $2 billion target. Hopefully, once we get there, we'll again chat about this.
Look forward to that chat, and we look forward to speaking with you in April once again. Thank you, Mr. Sampath, for your time and for answering all of our questions.